Recently, trajectories of currency pairs mainly depend on rhetoric of global central banks on monetary policy and their intentions. Indeed, macroeconomic data from all over the world confirms that the time is ripe for crucial changes in monetary policy. What data which is due this week can assure global regulators to review the economic forecast and stance on fiscal policy? Let's find out from the trader's calendar on InstaForex TV channel. The event of major importance this week is certainly GDP data of the largest global economy. Tomorrow, the US will provide revised GDP data for the second quarter. The final reading is likely to match the second estimate of 2% expansion, which was downgraded from the first estimate of a 2.1% increase. If the forecast comes true, the US dollar will lose footing. A slowdown in the US economic growth signals the Fed Reserve to lower interest rates. Besides, ECB President Mario Draghi is also expected to acknowledge the need to ease monetary policy in speech tomorrow. On Monday, the ECB leader noted that the Eurozone's economy is badly hurt by trading wars and Brexit-related political jitters in the UK. Bank of England Governor Mark Carney has already warned about the aftermath of the UK departure from the European Union. He is due to speak at the same event following a speech by Mario Draghi. Apparently, remarks from the leaders of the central banks are likely to weaken both the euro and the pound sterling. On Friday, traders are allowed to report on the US durable goods orders. The market will find out fresh evidence of the negative impact of Trump's protectionist rhetoric. The data could also encourage the US central bank to cut interest rates. Judging by negative forecasts, the trade war has not met Donald Trump's target yet. The US manufacturing sector has been still working at the steady rate. Following 2 straight months of growth, the factory sector is expected to contract by 1.1% in August. Investors are anticipating data on personal spending in the United States. The indicator of consumer activity could have dropped by half to 2.3% in August and months. Remarkably, consumer spending accounts for almost 70% of the United States gross domestic product. A decrease in personal spending would be another precursor of the looming slowdown in the US economy. This is another argument in favor of monetary easing. Such an array of downbeat data from the United States will trigger sell-offs of the US dollar. Apart from the above-mentioned reports, it would be a good idea for traders to consider some more macroeconomic data. Tomorrow, GfK experts will release a survey on consumer climate in Germany. The United States will report on its trade balance and pending home sales. Besides, traders will get to know comments from officials of the Federal Open Market Committee. On Friday, market participants are going to study indicators of consumer activity in the UK, the Eurozone and the United States. You were watching Forex Trader Calendar on InstaForex TV channel with me, Kate Stichina. We wish you profitable deals.